Take a look now at today's business news with Yuka Royer. Hi, Yuka.
Hi, Jenny.
So you're starting here in France, where the government's unveiling the budget for next year, focused on recovery from the coronavirus crisis.
Well, France plans to spend big on helping businesses get back on their feet following the worst recession since World War II, caused by the pandemic. The plan presented to the cabinet on Monday will see the state inject around 42 billion euros into the economy next year, out of the 100 billion euro COVID recovery plan announced earlier this month. The goal is to bring competitiveness back to pre-crisis levels by 2022. The new budget is based on expected GDP growth of 8% in 2021 after a 10% contraction this year. The French fiscal oversight body, HCFP, however, says the growth target is a little optimistic given the current uncertainties posed by the virus.
Next now to the UK, where Uber has won the right to continue operating in London.
A court in London has ruled in favour of the ride-hailing firm, which was contesting the city's transport authority's refusal to renew its operating licence over safety concerns involving fake drivers. Uber hailed the judge's decision as a recognition of its commitment to safety. The city's mayor, Sadiq Khan, says regulators will continue to closely monitor the firm's practice. Catherine Viette reports.
A victory for Uber after a UK judge ruled the ride-sharing app can have its London operating license reinstated. In his ruling, the judge said, "Despite their historical failings, I find them now to be a fit and proper person to hold a London private hire vehicle operator's license." Citing a pattern of failures, the city's transport regulators had previously refused to grant Uber a new license in 2019. Transport for London said Uber's platform had allowed for unauthorized drivers to pick up passengers, among other concerns. Uber says it's fixed security issues with its app and apologized for mistakes that were made. Monday's ruling marks the latest stage in a long-running battle between the taxi app and Transport for London. TfL first suspended Uber's license back in September 2017 over safety concerns. Uber appealed, and the decision was overturned by the court in June of 2018. Uber has faced a backlash and regulatory problems in other countries, including the U.S., Australia, the Netherlands, and Germany, and has been forced to withdraw from some cities. But London is the company's largest market in Europe, with about 3.5 million customers. Losing access would have been a big blow. Not everyone has been pleased by the decision, though. The London Taxi Drivers Association calling the ruling a disaster for London.
Meanwhile, in the United States, a video sharing app TikTok won a last-minute reprieve from being banned on app stores.
In the United States, this is really the latest development in another long-running saga. A federal judge in Washington ordered a stay on the download ban imposed by the Trump administration hours before it was to go into effect. It means that the app will remain available for download on US app stores, at least for now. The government argues that the app poses a threat to US national security due to its Chinese ownership and wants the parent company to cede total control of its US operations to American firms.
All right, let's take a look now at the markets. Yuka, European stocks rallying this Monday.
Well, major stock markets are all in the green comfortably at midday, riding on some positive industrial figures from China and a recovery in the banking sector. Uber shares rose about 6% after that court ruling. Moving on to some more of the day's business stories at this hour. ArcelorMittal has agreed to sell its US operations to Cleveland-Cliffs for $1.4 billion. The deal will create the largest producer of flat-rolled steel in North America. Shares in ArcelorMittal rose more than 7% on the Paris Stock Exchange following the announcement. The Luxembourg-based company had suffered a slump in demand caused by coronavirus lockdowns. German industrial giant Siemens spun off its energy division. The 16 billion euro valuation for Siemens Energy made it one of the largest stock market debuts in Europe this year, though shares slid on the first day of trading in Frankfurt. The energy unit, with 91,000 employees, has struggled in recent years as it aims to shift away from coal towards cleaner power. And Japanese chip maker Kioxia has scrapped a plan to go public next week due to US-China trade tensions. The company formerly called Toshiba Memory hasn't been able to ship parts to its major client Huawei since mid-September. This after the Trump administration banned non-American companies from supplying parts to the Chinese firm if their products contained US technology.
Finally, Yuka, it's not often we talk about K-pop in business, but we're going to do it right now. The K-pop band BTS had to cancel its concert in October. Lots of disappointment for its fans, but it seems like those fans actually have something else to look forward to now.
And indeed, it is rare that we talk about K-pop bands in business, but it is a very business story. There's quite a hype in South Korea over a market debut of BTS's management label planned for next month. Big Hit Entertainment has priced its initial public offering at 135,000 won, or about 100 euros. Institutional investors have shown interest in more than 1,000 times the number of shares on offer, and die-hard fans are also racing to place orders to support their favourite group. Kamina Dalek has the story.
Corporate stocks make unlikely band memorabilia, but they're about to be the latest hot ticket item, as the record label behind the superstar boy band BTS prepares for its initial public offering next month. One fan has built up an entire business around the group with this BTS-themed cafe. She says she's prepared to invest more than 100,000 euros to guard her favourite band from shareholder pressure.
그 부분에 대해서 좀 더 힘을 실어주고 우리 가수들이 하고 싶은 음악을 마음껏 할 수 있는 그런 기반을 만들어주고 싶어서 한 주라도 제가 좀 참여를 해야 되겠다는 생각을 했습니다.
The listing is set to be the biggest IPO in South Korea in 3 years. Big Hit Entertainment is looking to raise over 700 million euros by floating 21% of the company, giving it a market valuation of almost 3 billion, far ahead of other music industry rivals. Fans rushing to buy shares means demand could far outstrip supply, and run-of-the-mill investors could also get in on the action. When the label behind K-pop juggernaut Girls' Generation was floated, shareholders saw gains of almost 3,000% in the space of a few years. IPO fever has even gripped children, who are urging their parents to invest.
팔 것까지는 잘 모르겠는데 아빠가 일단 주식을 사서 오빠들을 만날 수 있었으면 좋겠어요.
The IPO will make millions for the BTS band members, as the Big Hit CEO gave them almost 70,000 shares each.
Yuka, thanks so much for that. Yuka Roye with today's business news. All right, there is a new fashion trend